and welcome to the Stock Planner channel. Today I would like to talk about a healthcare stock, Humana. I think healthcare is going to play a big role in the next decade, especially if we're still talking about healthcare for all. Do you think there's a chance for Medicare for all? How are we going to pay for it? Who's going to pay for it? Is healthcare a human right or a basic human right? How are other countries doing it? Free healthcare for all sounds great, and I wonder how many Americans are uninsured. Let me check. Well, I'm a little surprised with this number. It said 8.6% of the people do not have health care or health insurance. That's 28 million people. I thought the number was much higher than that. In other words, 91% or 92% have insurance. That's big business. And Humana, ticker symbol HUM, is a big business. It's a for-profit health insurance company. My wife is currently working in a hospital, and she's using Humana as her insurance provider. So out of the 300 million plus Americans that there is, Humana has about 25 million covered under their insurance plans, various different plans. Humana is the third largest health insurance company in the United States. It's headquartered in Louisville, Kentucky. Humana has over 13 million customers in the United States alone, and I believe that number is a little higher. This is a big company. It's ranked number 73 in the Fortune 500. And of course, it's the highest ranking company in Kentucky. It does service the Medicaid industry. So imagine Medicaid for all or Medicare for all would be attractive to this company. It's the leading managed healthcare company in the United States. It was founded in 1961 as a nursing home company. In 1972, it moved into the hospital business, and that's when it took its name. And recently, it started offering incentives to people that have a healthy lifestyle. I know that I fill out a form using Humana on my diet and exercise. In 2006, it started a pharmacy business. And in 2008, Fortune magazine named them the top 5 most admired healthcare companies in the United States. It has a pretty good reputation. I'm thinking that, according to what I've read, that Humana makes its money servicing Medicaid customers. Now, recently, and I'll show you this in a minute, Humana shares plunged when they gave some guidance that their Medicaid membership growth is not as good as it wanted. It'll be about half of what it's expected. Its growth, by the way, the growth is about half of what it expected. And that was not good for the stock market. This is TradingView in the daily time frame. My settings are in the description below. And we see the MACD is seen to be just flat, and so has the price. I do think the prevailing trend is up, but this stock seems to spend a lot of time in this area here. It's a $450 stock. So if you're investing $1,000, that you're able to buy 2 shares. It's expensive stock. Buying the stock is one option, but how far can it go? Here's that drop, and it's been recovering ever since. The RSI, stochastic, and the MACD occurred, but this is a few days apart. They give you a rough buy signal. There's dividend. Didn't really affect the stock price that much. This stock seems like it's going nowhere or flat. I'm slightly bullish on it because I think it will do great in inflation. They just raise their prices. Well, this is the technical analysis here. Let's take a quick look at the fundamentals of this stock. This is FinViz. It's a free tool. It puts these nice little lines here, support and sometimes the resistance and the channels. There's that big gap of when they said their Medicaid business was going to be not as good as it was. And it's been recovering ever since. And the old saying is that when you have a big gap like that, that gap tends to fill. And it's trying to fill now. The momentum play would probably be to predict that gap fill. The target price for this is $497, $500. $500 is up here. It certainly could get there. It's a 2.1, which this is a scale from 1 to 5. That's a buy, moderate buy. And it's optional and shortable. You can go, if you thought that this stock was going down, you could short this. I think I'm slightly bullish on it. And it's based on that stuff. Tip ranks has it 466, a little bit lower than FinViz. Moderate buy, again the same as FinViz. The analysts think that the stock is about a 6, which is average. Hedge fund activity has decreased. You want to see that growing. And the technicals are positive, and the fundamentals as well, and we'll see this in a minute, are positive as well according to tip ranks. And the next earnings is April 26th at the end of the month. Simply Wall Street has this stock trading at 51% below its what they call fair value, which is based on the free cash flow model. And free cash flow is how much you have to invest back in the money you have in the bank that you can invest back in the business to produce more money. Earnings are supposed to grow about 10%. This is a snowflake. It's healthy. Doesn't pay a dividend. It's good value. Future doesn't look so hot, according to Simply Wall Street. United Health and Anthem have green snowflakes, and that's what you want. You want to see big green snowflakes and not little skinny red ones. So they're rating these two companies much higher and safer. This is what we want to see. We want to see a stock that's undervalued, and we want to see it's growing, and this stock is. And we think eventually the price will get up to where the fair value of it is based on free amount of money they can generate by reinvesting in themselves. That seems a bit high. But I do think 500 is definitely doable for the next year. Let's take a look at the future growth. Yeah, that's the kind of line you want to see. So undervalued and growing, I like that. And in the past, it grew in the past. The company in the past has grew more than the market. Let's take a look at the future growth. It's the same kind of thing. It's going to grow a little less than the market. It pays a very small dividend, and their assets exceed their liabilities, so it's a healthy company. So if we could find something that would be between these two lines here, I suspect for the next month it's going to be hanging around this area. So it should be a neutral play. But this is a $400 stock. It's going to be hard to find something that's cost effective for small play. That's all I'm doing right now, small plays. 450 and about 420. Going in the option strat, looking at the build, I like to do calendar spreads, but I know I only do calendar spreads for cheaper stocks. Humana, calendar spread, you have to pay $1,000, well, $1,200 to make about $1,200, a little less. And let's look at another neutral spread. This time the credit is nearly $2,000. That means money in your pocket. The max loss is about $575, and it's between 420 and 450. 420 and 450. 460. 460. Well, I like those odds. And I did a little predictive thing where the expected move is around $3 to $4, and it's currently at 441. Let's just say 442, and $3 will be 445. It's right here. And if it can hold out a few days and only go up a little, you could get $60 to $80. Let's just say $70 if it moves by only $3. Now, if it only moves by $3 and you want to stay in, there's your payoff. Neutral strategy for arm butterfly, and you do it by selling two puts, selling and buying a put, and selling and buying a call. The option strategy is a nice simulation tool. So as long as it stays in between these two points, you got some kind of profit. And of course, you could take profit anytime along the way, especially if it moves only $3 or $4, and you get a little anxious. You only have a loss of about $600 to make $2,000. That's a 3-to-1 risk-reward ratio. I like. Let's just check out these numbers. 420 and 460. 420 and 460. Do you think it's going to play in this area? And you can take an early profit of $70 with a risk of about $600. That's a pretty interesting profit in a short time frame. That's 11% in just a few days. I like. So let me try to summarize here. We have a company that's trading at $441. That's a lot of money. You could buy up to 2 shares if you're trading with about $1,000 a pop with a $10,000 account. It's got some future profitability according to FinViz. Very large company. The target price is $497. Earnings is at the end of the month. Be careful. and it's got a buy rating. Tip ranks as again a moderate buy and a forward target of 466. Calculating the expected move out to May 20th. Well, basically, take the prices differences between two options and the values they put at those options, and I can calculate whether it's going to hit or miss, and it come up with the expected move of $3. That's the formula. Take a put and a call near where the option's trading, and that pricing there, you can do a calculation on what the market is pricing the expected move as. Taking a long and taking profit at 5%, your profit targets need to be here, $500. That's a pretty good stretch. But if you do reach up there and you have a good risk reward of a 120 to 80, that's taking profit at 5% and stop loss at 2%. And here we calculated this to be around $70 using option strat, and this is based on, if you just get a small move, this is what you would be the profit based on targets of 444. And I showed you on option strat where if it only moved a little bit, you could take down $70, but you had to wait a few days, 10 to 12 days, where it doesn't move. I would think it's going to move slightly. Tip rank says it's going to move slightly. FinBiz says it's going to move slightly. The option pricing says it's going to move one way or the other, about $3 or $4. And the charts say it's only going to move slightly. MACD is flatlined, and these are not telling us much. So what do you say? Please leave your comments below. I like this trade. I like the good risk reward about it. I like the company. I do think it has a good future. I don't like a snowflake. Lots of things go into making a trade and making a trade decision. Ultimately, there's no set of perfect conditions. Ultimately, you have to decide for yourself. That's why it's called trading. I hope your trading is being successful. Mine has, especially since I put out these videos that have slowed me down, made me think a little harder. My trading has gotten a lot better and more profitable. I had a good week last week. I hope you did too. Catch you on the flip.
The Stock Planner channel is an education channel, sharing our swing trading ideas, learning from each other and winning. Watching and engaging with this channel will help you develop your own trading strategies and risk management plans. Let's take the journey together on becoming a more consistent and profitable swing trader.